All right, hi, welcome everyone for your time. I'm so glad that I managed to catch this one of my friend. He looks so young, and his name is Mac. All right. So who is this fella? Okay, simply because he's very young, he's very charming, and he's one of my investment mentor, a friend of mine. He taught me some ideas or what I'm supposed to do in my investment journey as well. So let's welcome Mac.
Hello, everyone. All right, happy to be here. All right, able to share some stuff with you guys.
Yeah, hi Mac. Okay, Mac, just do you mind roughly like introduce a bit of yourself so that my audience can know roughly who are you? Like, yeah, a quick one, quick one.
Okay, so very quickly, I started, I think, investing about close to 9 years ago. So mostly I do value. I started off with value investing, right? Mostly in the US stocks, right? US stocks. Why is also because there's a lot of higher growth potential. There's a lot of volume, everything, right? But mostly my journey has been on US value investing, right? And I also started on options investing as well. So so value investing generally, yes, you can make money when the market is up and everything. But with options investing, right, you actually can make money no matter what the market direction is. So that's generally what I've been doing over the past few years. So I've been conducting sharings, workshops, trainings to not just Singapore but Malaysia as well. So that's just very very quick summary of what I've been doing in my investment journey.
All right, thank you, Mac. Yeah, I mean, I heard of you. I mean, I meet you in Malaysia as well. It's not in Singapore or some other place. Okay, just a
Yeah.
quick question to you. Actually, for the current situation now, do you think that we are so called? Are we supposed to enter the market now, or we have to pull back a little bit because the current market is quite very volatile? So what do you think from your past experience?
Yeah.
Do you mind to sharing?
Yeah. So firstly, as in, or it really depends. Firstly, also whether are you just into stock investing or or do you do options as well, right? So I'm going to assume, firstly, like for the average stock investor right now, right, the ones that don't do options or anything, which is right now my personal take, which I could be completely wrong. I could be completely wrong, right? So I'm going to share with you a bit more about how I make sure that either way I'm still on a winning trade, but right now, I do feel that the market is still a long way down, right? Because unemployment rates in US has been sky high. It hasn't been this high for a long, long time, right? Growth rate is going down. Businesses are defaulting on their debt payments, rental. I think a lot of landlords are actually having their tenants to be defaulting on their rents, right? So if you tell me about it, right, like like regardless of the stock market, right, businesses are closing down. Like companies are struggling, people are unemployed, right? Like businesses are going to be affected, right? Whether you're a big company, whether you're a small company, right? You are going to get hit, right? Of course, unless you're like producing masks or whatever, for example. But generally, I do feel the economy is going to be hit regardless whether the stock market is up or not. So that's number one, right? So next, right, is that why is the stock market still going up? Right, I know in the past week, as of this interview, right, the past week market has been going up, and why? One of the reasons is because there's been a tons of stimulus package for the economy, right? So the US is printing money like crazy, buying bonds, trying to stimulate money in the economy, right? And that's why the stock market people are happy, right? The stocks are happy, it's going up, right? But my take is it's likely going to go like my take is going to there's still going to be one significant drawdown, right? Markets still go down before it can start picking up, right? And like the effects, right? The effects of this whole crisis, it won't be so easily like, oh, once there's no one with the virus, immediately the restrictions are removed. I don't think that businesses will recover that quickly, right? There's going to be a bit of a lag time. There's going to be some time before the economy starts picking up again. So that's my take, right? I do feel that the market has long way more down to go. And what should stock investors do right now is, firstly, right, they can just invest a bit first. They can just start buying into companies they feel are cheap, right? Right now, but not to be too aggressive buying it. So right now, in terms of stocks, right, I am buying into some companies, but I'm not very aggressive, right? I'm still have cash set in place, right? It's very important to have cash because the only reason like if you want to take opportunity of this entire market crisis, is you must have cash in the first place, right? If you don't have cash, it's like, for example, there's a great sale going on, you don't even have money to take advantage of the sale. So my take is to put in a bit first, right? Because on the crazy off chance, I can't imagine why it will happen, but on a crazy off chance that the market goes up forever from here, it becomes a massive bull run right now, right? At least you'll still get to take part in the upside, right? But if it goes down, right, what happens if I buy some stocks, it goes down, right? I won't be like, oh, I should have waited before it goes down further to buy, right? Because my game plan is I'm going to buy some now. If it goes slower, I'll buy more stock. So I never, one thing is I never try to predict the market with 100% certainty, right? I do have a thesis of what's going on, right? But either way, in terms of my strategy, right, I won't be kicking myself. For example, if I buy some stocks now, it goes down, right? I won't feel regret. I won't feel angry or anything, right? I just know that, oh, it's part of the market. Let me just buy more stocks when it goes down. So that's for one, for stock investors. For option investor, right? For option investors, I've been, to go a bit more technical, I've been selling put options way out of the money, right, on stocks with strike prices that I want to buy at, right? So Expedia, that's $50. I really don't mind buying at. Imagine if Boeing that time was at $50, I was selling puts at it. I didn't own the stock, but I was earning premiums from it as well, right? So that's what I've been doing, and it's a very simple strategy, right? So regardless the market goes up or goes down, I'm happy, because even the market goes down and Boeing or Expedia goes to $50, $40, right? I'm more than happy to own it at this company. Because why, right? Yes, there's a lot of problems happening go on now, but the market will still go up in the long run, right? I still believe in people. I still believe in humans. They're the most powerful creatures on the planet, right? They're evolving, they're adapting, and we have been through worse things than this. If you can ask me, like, we have been through world wars, we have been through political assassinations, everything. The market still goes up in the long run. So that's my overall thesis, right? And yeah, so that's what I've been doing. The market, should people go on, should buy stocks right now? Maybe a little, probably a little. But my take is that market will still go down a lot more.
All right, cool. Nice sharing, man. Okay, I mean, from your explanation just now, I can just roughly catch it. Actually, you have your proper plan on what you're gonna do for the current situation right now. And as you mentioned, the long run, we're talking about the long run, the market is going up, right?
Yep.
Just that because of the current situation, like COVID-19, and because of this COVID-19 and the economic crisis down, and you think that the market is going even further, but you might be wrong, as you mentioned, right? So we cannot predict the market, right? So okay, since like we are talking about this, like we do not know where the market goes after this, but confirm job is like 100%. The long run is going to be upturn. So can you advise like those people that haven't even start investing, or they never touch, they do not know how the US stock market goes like, how is it goes like? Do you mind to like sharing like why my friend or my audience need to start invest, or should they start now, or they should start later, or what is your take?
Sure. No problem. Yeah, so like back to what you said about the market, right? We don't know how like confirm guarantee plus chop, it'll go up, everything, right? So of course I would say 99.9% certainty, right? But one thing to note is that even if like by this time next year or even 2 years later the market doesn't go up, right? It doesn't mean that the market is going to be down and doom, right? So during the Great Depression, right? During the Great Depression, the market actually went down by 90% over a period of 3 years. 3 years. Right, so there's just something to note, like, hey, for investors, especially who are new, or even those experienced ones, right, you cannot expect for the market to pick up in the next 6 months. I mean, it could possibly, maybe, I don't know, but if the Great Depression took 3 years, right, we can't even expect for the whole market downturn to be as long as that, right? So hopefully it doesn't. I don't think it will, right? But we could be mentally prepared for that. All right. So for new investors or new people, why they should start right now, right, is that for sure, like right now when markets are cheap and there's a lot of uncertainty going on, a lot of volatility going on, right? That's when the greatest opportunities present itself, right? It might seem cliche and everything, right? But right now, there's a lot of opportunities going to take place. There's got a lot more volatility that's going to take place, right? And one thing is, if you just put your money in a bank account, for example, right? And honestly, I am not an economist, right? But I've been reading with a lot of printing of money. People are just doing tons of stimulus package, right? One thing to know that inflation, right? Inflation could be a potential problem. Devaluing the currency could be a potential problem. And if all you are doing is just to put your money in the bank account, right? You will lose value, right? So what $10 can buy today will not be what $10 can buy in 5 years' time, for example. So if you just put your money in the bank account, for example, right, you're not going to do very well. Right, that's one thing, right? And so one thing is, I do feel that they should take advantage right now. They should invest right now, right? One thing is, yes, there are potential gains to be made. Secondly, right, you can learn a lot from this experience, right? Because even if you are looking to like doing a bit of trading, for example, right, Tony, is that, right? I've been listening to some experienced traders and everything, and they said that right now, market movements, the news, everything is what that's happening in like a 1 month's time, 6 weeks time, right? Is what typically in normal times takes about maybe close to a year for it to happen. So it talks about learning curve, you talk about opportunity, you talk about experience, right? Like right now is the best time to enter, right? not to put in all your money, for example, right? No one is telling you to put in all, but to at least enter the game, to at least to start educating yourself, to actually start understanding what's happening all right now and having a good strategy to take advantage, right? Now is a freaking important, now is a very good time to do so.
Yeah, nice take. Hey, actually, just now you mentioned something. Actually, is it? I mean, I have to something when you mention this thing. Actually, like right now, like what Warren Buffett keep on saying that the value is what you get, the price is what you pay. So like what you're saying,
Yeah.
the a lot of stock market now is like have discounted price about 20 to 30% below. I think it's a good take for me, right?
Yeah. So right now there's a lot of interesting opportunities, right? But right now, right, it's not that cheap yet, you know. Like if you look at this thing called the Shiller's PE ratio, right? So it's like the overall market of the US big companies, right? It's like it's still not that cheap. It's still not that cheap. I think right now it's about a P ratio of 23.5. It used to be as high as 30, right? And it went down. It used to be as low as 15, 14 before. So right now, yes, it's cheaper, right? It's exciting time, but I don't think it's that cheap. Right. So, and then number two, I'm actually looking for companies that will do well regardless of market conditions. Right. That's one thing that I'm looking at. Is what we call non-discretionary companies, right? That's not heavily affected by market. So one company that might be heavily affected, right? Right now is a company called Disney. Right. So Disney resorts and parks are being closed. Their Disneylands are being closed. Movie production has stopped. Movie screenings have stopped right now. ESPN is stopped their own ESPN as well. So if you are a new investor, right, and if you cannot take this volatility, right, a company like Disney, you might not want to invest, right? You might not, right? In the long term, I do like Disney as an investment, but if you are new, right, if you want to sleep soundly at night, which is my biggest criteria, right, for any investment, right, I might not want to invest in Disney, right, because you will just be busy checking stock prices every night. It's very scary. But a company like Facebook, right, a company like Google, right, I know that, hey, recession or not, lockdown or not, people are going to use Google, people are going to use Facebook, Google Drive, Facebook Messenger. Like people are going to use it, right? People are going to use it even more, right? And not just the fact that more people are going to use it because I know that their financials are strong. I know that they are strong competitive advantage, right? I am more than happy to own these companies at the current cheap price at the moment, right? So, but I know during the past week, as of this interview, right, Facebook is about $165, $170, right? It's still, I would hope it will be cheaper, right? It will be cheaper. So 2 years ago, I think there was the Cambridge Analytica scare, right? Facebook went from $220 over to $120. So that would be like almost 50% off its all-time highs, right? So I'm looking out for this sort of opportunities, right? That market has dropped, there's a sell down, but some companies that will do well regardless of the crisis, right, will be a very cheap investment for me, right? And it's for good companies, which I absolutely don't mind.
Yeah, true. I understand. I truly feel that feel. Especially like I'm the actually to be honest to you, actually Disney is one of my shopping list. Actually I don't mind owning Disney like at the current price. It's just that my emotional I have to take it that the thing is might be going even further down. But of course I don't mind to uh own it in an even further down price.
Yeah. If you
Yeah,
sell a
this
put of it, so you know, so if you know options like you sell a put of for Disney for $70, right? It really means that you don't mind owning Disney at $70. Then yeah, so why not get paid while waiting for Disney to go to $70? And even honestly, right, even if it goes down to $60, $50, it's fine because your game plan was to own Disney at $70, right? So a lot of people they start getting worried, they start getting concerned, right, when the stock goes below their strike price, right? But my thing is, if you were okay to buy Disney at $70, which is like 50% off his highs, right? Like it's 50% off his highs, right? Like I don't mind lah. So even I might take a temporary loss and everything, but Disney of $70 is a very, very attractive thing to get. And quick news. So the CEO Rob, I think Rob, I forgot the name, right? He was actually supposed to be like retired as a chairman, right? But right, like, now I realize that he's actually going to come back right now because of all the things that's happening. So he thought that he was leaving Disney at a good time, right? When it was at the high, they just bought Lucasfilms, everything. But I realized that he's actually going to come back to help out again. So we'll see what happens for a company like Disney.
Yeah. True. Okay, just last but not least, just last. Actually,
Sure.
if my friend would like to learn about this called US stock investment, so do you have any like idea or any recommendation or so called where they can learn all these things? I mean, can you like
Yeah.
advise
So
or share something?
So of course, right? Yeah. So value investing is the first and foremost thing you want to learn. Right? If you want to learn about options, sure. But if you don't have a strong fundamental of value investing, right, you definitely can learn it. So I know Tony, you have recently launched. You're going to launch or launch a value investing program. I can check him out. You can check them out, right? Because that is the most fundamental thing to learn during this period of time. So that's something I highly recommend. Learn about value investing. Check out resources, right? You can either Google it, you can either read a book by yourself, or you can actually check out online programs over there. And Tony has one, you can feel free to check him out as well.
All right, thank you for encouragement. Thank you for that. Yeah, I just my intention is actually just want to share with my friends and family, or even those people that I do not know, because for me I feel like investment is a need instead of a want, right? So that's why I'm creating this, because I have a few. I'm doing this like I burned a lot of my midnight oil and doing all the slides, trying to grab a lot more and more and more resources and more so-called value for my so-called students in the online courses, to make sure that they understand, they really understand the fundamental is a so important things before you even step into the world of investing. Yeah, that's my intention. That's my intention.
It's very important to educate yourself. Yeah.
All right. Thank you, Mac, for your sharing. Any last word before we end the whole thing?
No worries. So when it comes to investing, right? So I always feel that it's a long-term game, right? So even for those experienced investors, even if you're making mistakes right now, even though you are facing problems right now, remember, right, that all these mistakes is help you, is if you keep going, right, it's basically to help you to grow, right? Because our ultimate aim as investors, right, for me, is not to manage a 4-digit investment, it's not to manage a 5-digit investment. The ultimate aim for any investor, I feel, should to be minimally to achieve at least a 6 to 7-digit portfolio. That's the minimum, right? And the thing is, if you make a mistake that's like $500, $1,000, right, even like $5,000, right, my take is, yes, it's painful, yes, it's hurtful right now, but if your ultimate aim is to actually achieve the 6 to 7-digit portfolio, right, this sort of mistakes is just going to lead you there better. But the one thing is, you cannot give up, you cannot quit, right? So that's one of my final message I'll give to your guys over here is that, hey, even if you're making mistakes right now, even when you get started, you make some mistakes, right? Ultimately, your goal is your 6 to 7-digit portfolio. All these mistakes at the beginning will seem like nothing to you in the future.
All right, golden rule, golden message.
Yeah.
All right, I would like to say that. Okay, see you, Mac. It's a good time sharing. I hope you benefit all my audience, and thank you for your time. Thank you for a wonderful thing, and please stay safe, man. Stay safe.
Okay, my pleasure. Right.
Okay, see you. Bye.